Hello, my friend. Welcome to Charlie Retail Invest. Let's track the latest trend in US economy and share our recent investment in stock and bond markets. Today is Monday, August 4th. First, Charlie will share with you the AI investment system's predictions about when the S&P 500 index will likely bottom out, allowing us to buy the dip in index ETFs. Next, we will discuss why Charlie sold part of his Google positions today, locking in a 3-week 11% short-term capital gain, and then bought shares of Eli Lilly and Citigroup on dips. Well, in the last episode, we focused on the hawkish attitude of Federal Reserve Chairman Powell, which forced the market to begin pricing in the possibility of a delay in cutting interest rates or a reduction in the number of interest rate cuts by the Fed in 2025. If the Federal Reserve cuts interest rates too late or too slowly, it will reduce market liquidity and lead to a massive sell-off of stocks by institutional and corporate executives, which have already started in mid-July. This could lead to a significant decline in the US stock market, including the S&P 500 and Nasdaq 100 indices in August and September, which is historically the weakest season for US stocks. Although both the S&P 500 and Nasdaq index rebounded strongly today, the S&P 500's closing price of 6,340 points is still a long way away from its all-time high of 6,430 points reached last Friday, August 1st. We are likely to see a volatile downward trend in the US stock index over the next few weeks. A clear sign that market sentiment has shifted from extreme bullish to a more conservative stand is the recent hotly traded stock of a small to medium-sized tech company named Circle. Following its IPO in early June and a month and a half of frenzy following its listing, Circle's stock price has plummeted by over 12% over the past week. Circle's stock price now is at $165, down 43% from its high of $290 on June 23rd. Charlie also doesn't recommend buying Circle stock right now, as its share price still has significant downside risk. Currently, the CRI investment system suggests a reasonable price range for Circle in the short term, which is between $95 to $120. Of course, with the correction of the US stock market, there is a high probability that Circle stock price will fall below the $90 mark. Our friends should be careful to avoid buying Circle too early and then being deeply trapped. Another example of the market sentiment shift from bull to bear is Figma Technologies, an online UI and UX design tool company that went public last Thursday, July 31st. Its stock price soared from its IPO price of $33 to a high of $140 on its first day of trading. However, following the hawkish stance of the Federal Reserve after the FOMC meeting, Figma's stock price plummeted 27% on August 4th, closing at $88.6. Within 2 days, the stock had fallen 37% from its high of $140. Because Figma has only been IPO'd for less than 1 week, my AI investment system doesn't yet have enough data points to suggest a safe entry price to buy its stock in the short term. Furthermore, Figma is still losing money, so Charlie cannot assess whether the company is undervalued or overvalued by the market based on its fundamentals. Therefore, Charlie does not recommend that people rushing in to buy Figma stock unless its stock price falls below $50 per share. Perhaps you can then buy the bottom and make a short-term transaction profit. Having said that, we finally come to the first main topic of today, which is when the S&P 500 will be able to form a bottom pattern. According to our AI analysis, the S&P 500 index is most likely to bottom out between 5,800 and 6,000 points during August to September correction. This bottom is most likely to occur in late August, around August 21st, which is still 2.5 weeks away. Moreover, the AI system also calculated that there is a 30 to 40% chance that the S&P 500 index will fall below the 5,800 point mark and drop to even the 5,600 to 5,700 point range. Of course, if this situation really happens, we should not panic and sell at the lowest point. Instead, we should boldly buy index ETFs such as SPLG, QQQM, and SPMO, and then wait for the index to break up through 6,400 points again by the end of this year and set a new all-time high. Taking advantage of today's rebound in the US stock market, I also took some profits from my Google's position. I bought 111 shares of Google at $175 on July 10th and have held them for about 3 weeks. And today I sold them on August 4th with a price of $194, locking in an 11% short-term gain. So in less than a month, I made a net profit of $2,109 from Google's investment. However, this reduction of holdings in Google doesn't mean that I'm bearish on Google's prospects. On the contrary, I believe that Google will continue to have amazing performances in cloud services, artificial intelligence applications, and other related fields. However, with the broader US stock market starting to correct, Google's stock price is unlikely to be an independent counter-trend rally over the next 2 months. This is because Google has always been a low beta stock, and its performance is closely tied to the performance of the S&P 500. Furthermore, as mentioned previously, I've been increasing my Google's holding over the past few weeks. So prior to today, my Google position already accounted for 40% of my entire portfolio, making it a significant holding. Therefore, to reduce overall portfolio risk, I have chosen to take some profits off from my Google's position today and reduce my total position of Google from 40% to approximately 17% now. I have also increased my holding in the ultra short bond ETF XLV. So in doing that, I can continue to hold the remaining Google position until its stock price breaks through $200 again and make a new all-time high. And in late August, the US District Court Judge Amit Mehta will propose remedies for Google's illegal monopoly case on the online search market. These remedy measures could involve significant adjustments to Google's core businesses, or even require Google to sell off its Chrome browser and other core businesses. And regardless of the outcome, Google has stated that it will continue to appeal the ruling, and the final ruling on this case is expected to be delayed as late as the end of 2025 or even 2026. The August court ruling may cause short-term fluctuations in Google's stock price. However, in the long run, this legal challenge will not have a substantial impact on the company's value. And it's good to be aware of this matter, and there is no need to worry too much. I remain very optimistic about the future of this tech giant. In addition to take profits on Google, I have also established a position today and bought shares of Eli Lilly, a leading company in the pharmaceutical industry and the king of weight loss drugs, with a price tag of around $756. Eli Lilly now accounts for 14% of CRI's portfolio, second only to AMD and Google. I have also made a small purchase of the 2 times leveraged Eli Lilly ETF LLYX at a purchase price of $14.6, representing a 3.5% position. If we take a look at Eli Lilly's stock performance over the past 6 months, we can see that it has been experiencing a period of volatility. Logically, Eli Lilly's GLP-1 weight loss drug, that bond, is in the dominant position and experiencing sustained growth in both efficacy and sales. So why hasn't Eli Lilly's stock price broken through the $1,000 mark? Well, this is mainly because the Trump administration has been sending strong messages since May this year, requiring major global pharmaceutical companies, including Eli Lilly, Pfizer, Novo Nordisk, Roche, AbbVie, to lower the prices of prescription drugs sold in the United States. And on July 31st, Trump told the 17 major pharmaceutical companies that they must take concrete measures to significantly reduce drug prices in the United States and ensure that Americans pay no more than the lowest price paid by other developed countries for their drugs. Trump also warned in the letter that if pharmaceutical companies do not cooperate, the US government will use all its means to protect American families from unreasonable drug pricing practices. After the letter was released to the public, the medical sector ETF XLV plummeted in price, and Eli Lilly's stock price was also greatly affected. However, from a fundamental perspective, Eli Lilly's EPS growth rate will reach a staggering 69% in 2025 and 37% in 2026. This means that Eli Lilly's net income will increase exponentially in the next few years as its GLP-1 blockbuster drug sell well. According to Yahoo Finance, Wall Street analysts recently have updated Eli Lilly's revenue forecast for the second quarter of 2025. They currently estimate Lilly's net income per share in Q2 to be $5.61, a 43% increase from the same period last year. Lilly's revenue for the quarter reached $14.75 billion, a 30.5% increase from the same quarter of last year. Of course, due to the impact of changing tariff policies, Lilly's EPS in the second quarter of 2025 was revised down by 1.5 percentage points in the past months, but it still remained very strong. Besides the weight loss drugs, Eli Lilly has also made significant progress in treating Alzheimer's. Its investigational drug, donatumab injection, significantly slowed cognitive decline in patients over a 3-year period in a phase 3 clinical trial. Furthermore, compared with patients who delayed treatment, those who took the drug early had a 27% lower risk of progression to the next stage of the disease. This is definitely a very good news that Eli Lilly has regained its leading position in the field of Alzheimer's disease treatment too. So Lilly will release its second quarter earnings on Thursday, August 7th. I am very bullish on Eli Lilly's stock price performance. If the stock breaks above $810, I would consider selling some of my Lilly shares to lock in short-term gains. In addition to Eli Lilly shares, CRI Investment Portfolio also bought 10 shares of the healthcare sector ETF XLV today, with a holding cost of $131.8 per share. When the XLV price reached above $136, I will sell it for short-term capital gain. Because the Trump administration has given major pharmaceutical companies 60 days to cooperate, we only need to sell XLV and other pharmaceutical company investments before the end of September. This will effectively avoid the impact of policy risks on stock prices. Finally, I also bought 27 shares of Citigroup at a price of $92.6, accounting for about 3% of my total position, with the goal of long-term holding these Citi stocks. Citigroup's EPS has maintained annual growth exceeding 20% since 2024, demonstrating its strong fundamentals. In 2025, Citigroup's EPS growth is projected to reach $27.3, and by 2026, EPS growth is projected to rise to around $30. It's no wonder that Citigroup's stock price has risen by over 50% over the past year, even outperforming the industry leader JP Morgan Chase. Thanks to the deregulation brought about by Trump's Big Beautiful Bill, Citi will focus on its increasing market share in consumer lending and investment banking services. Charlie is also very optimistic that Citi's stock price will soon break through $100 hallmark and continue to set new highs. Next, let's look at CRI's investment recommendations. As of August 4th, the AI investment system's portfolio allocation remained at 50% for US stock and ETFs, 20% for ultra-short bonds, 20% for gold ETFs, and 10% for Bitcoin ETFs. At this point, we still don't recommend rushing to buy stocks or indices. Instead, we recommend allocating excessive cash to buy ultra-short bonds like USFR or SGOV so that we can be prepared for buying the potential dip by the end of August. This is the latest CRI portfolio holdings as of August 4th. With Google's profit taken, AMD now become our largest holding, accounting for 23.1% of the entire portfolio. AMD will release its second quarter earnings report after the market closes tomorrow. We will continue to hold AMD and look forward to its positive surprises after the earnings report. Lilly's holding currently stand at 14%, exceeding the holdings of the gold ETF IAUM. We have also increased our holdings in the ultra short-term Treasury bond ETF SGOV, which now represents 7.2% of our entire holding. Recently, we sold our Berkshire Hathaway and Lululemon holdings because both stocks had been in a downward trending pattern, and I cut the loss early. In addition, we have also purchased the 2X Lilly ETF LLYX, the healthcare ETF XLV, and Citigroup shares. We have also bought a small amount of the 3-time leveraged healthcare ETF CRI for short-term capital gain purposes. This is CRI's portfolio return for 2025 year-to-date as of August 1st. Our total return remained at 11.6%, which is 4.75 percentage points higher than the S&P 500's return of 6.85% at the same time. We hope that CRI portfolio will continue to deliver strong growth in the coming months. And that's the whole story of today's video. If you are a retail investor like myself and would like to know more about the US economy and follow our most recent trading activities, please consider subscribing our channel, Charlie Retail Invest. Thank you so much for your time and support, and I will see you in the next video. Please take care. Goodbye.